Right then, folks. Thank you, first of all, for your patience while we sorted the sound out. Always seems to have a few problems with my side of things. Visuals, we should see 4 charts. Currently looking at Euro Yen, 240, 60, 15, 89, 6. Topic of discussion today is going to be thinking about counter trend trades. We spent the last several weeks, first of all, reviewing the strategy, thinking about what a trend looks like, how to identify the trend, how to identify the turning point when price goes from a long trend to a short trend, or from a short to a long, or to be fair, from a long to range bound, or from short to range bound. We've looked at that in a lot of detail. We've seen some practical examples of those situations. Let's now think about counter trend trading. Okay, so we know how to identify the trend. And very simply, when price is making higher swing highs, higher swing lows, price is going up. So we can see this portion of the chart here that price is ultimately going up. And in the next portion of the chart, we can see that price is going down. Okay, so we know that the direction of the trend. We also know when the turning points for these direction shifts develop. There's one turning point. There's obviously a second turning point which worked as a continuation, consolidation in price. And the turning point on the chart was here for the long. Okay, so we've got price in an uptrend with the first blue box. Price goes into a consolidation. Price continues its uptrend on the breakout move. And we've got price moving into a new downward direction phase, or a downward trend. In between those phases of movements, we can see counter trend movements. So what can we do to try and identify a potential counter trend trading opportunity? Has anyone got any ideas? Let's throw the question to the floor. Counter trend trading. We know that when price is making higher swing highs, higher swing lows, that price is going up. Lower swing highs, lower swing lows, price is going down. But what about those counter trend movements? They can still be profitable. How do you think that we could identify those counter trend movements? Divergence, one example, but to be fair, do you see any indicators on the charts? I don't use them, so how can I identify a counter trend movement? To be fair, Eric, in my own experience, my first thought with a divergence is consolidation. And quite often you'll see price retest the zero line of a MACD, just as an illustration, before continuing and resuming its trend. Indicators for me are one of those things that they look great with hindsight, but in real time, unless you fully and completely understand that tool, it can be quite difficult to use. So how can we identify a potential counter trend trading opportunity? Support and resistance, yeah, that's one way of doing it. Reversal bars, that's another way of doing it. What I'm looking for is based on price, so it's not going to be indicator related. We can also look at these things in conjunction with support and resistance. We're just going to look at them pretty much on face value for the moment. But I'm going to talk through what I typically call reversal bars. That is hammers, dojis, shooting stars, piercing line, dark cloud cover, engulfing bars or outside bars, another name for the same thing, and what I call a 2-bar combination. So basically, reversal bars. The obvious ones are hammers and shooting stars. And we can obviously use those other candlestick bar formations to identify the potential for a counter trend, or even to be fair, a resumption of a with the trend movement. So let's just go through the chart first of all. Just mark off a few reversal bars. So we've got reversal bar there, bearish engulfing bar or outside bar. I've got another bearish engulfing bar there. I've got a hammer. I'd call that, well, you could argue that's a hammer stroke dark cloud cover, but I think we'll call that a hammer. Just next to it, we've got quasi doji. We've got a hammer bar formation, shooting star, hammer stroke doji. Okay, so the point is, if you look back across your chart and you look for those typical, what I would all call reversal bars, hammers, dojis, shooting stars, piercing line, dark cloud cover, engulfing bars or outside bars, and a 2-bar combination. We'll come on to 2-bar combinations later. What I can see almost straight away, even if I'm not going to mark them all off, it would just be too time consuming. But what we can see, if we just have a rough look at the full picture for a moment, we can see lots of hammers, lots of dojis, shooting stars, and often they do develop at significant turning points. So what I can do is I can then start to think about using these or trying to use these to identify a counter trend opportunity. I already know what with the trend looks like, but I can start to think about a counter trend trading opportunity. So if the trend is up, let's just scroll back the chart for a moment. So if the trend is up at this point of the chart, then I know obviously that price is making high swing highs, high swing lows. And what if there's a possibility of a counter trend trading opportunity? So as the chart unfolds, we can see that price continues to rise, rally, still makes high swing highs, high swing lows. But this is going to be the bar I'll be interested in for a counter trend trade. Now I know that this is potentially indicating a counter trend movement for me. First off, it's a reversal bar. Secondly, it's counter the prevailing trend. So how can we participate in counter trend movements? That's if obviously you want to participate in counter trend movements. How can we do that? Well, first off, we can think about these reversal bars as an indication to highlight a counter trend movement. So the direction bias is up, it's making higher swing highs, higher swing lows. Now although there are lots of reversal bars that do develop that go with the trend as well, I'm already thinking about with the trend trades. So this is trying to identify a counter trend opportunity. Now we can also use the same reversal bar to look for a confirmation of a resumption of the uptrend in the same way, but primarily this is to identify a counter trend trading opportunity. So the trend is up. It is making higher swing highs, higher swing lows. Most recent bar that we can see on the right-hand side of the chart is an engulfing bar, a bearish engulfing or a bearish outside bar. So what I can do temporarily is to say to myself, I'm going to stop looking for with the trend trades and think about the possibility of a counter trend opportunity. My trigger for the counter trend trade is going to be the low of that reversal bar. Now the rule I use for this is for the next 4 hours, for the next 240-minute bar. This is a 240-minute chart, sorry, Erin, do I look at this in the higher time frame? Typically, the 240-minute chart is my higher time frame. So I'm going to take my indication of direction off a higher time frame. Price is in an uptrend, bearish engulfing bar, and I can use that bar as my trigger to think about a counter trend trading opportunity. Using the low of this bar, I can use as a trigger level to take action for a counter trend trade. And I'm going to look for that for the next 4-hour time period. So the bar that goes through the 4-hour bar, whether it be the next bar or a subsequent bar, that goes through the low of that reversal bar, I'll be looking for counter trend trades until the completion of that 4-hour bar. Now, because we're not looking at this in real time, it Does that make sense, first of all? The bar that triggers the counter trend's move, the lower that reversal bar on the 240-minute charts, I'm looking for that counter trend trades only until the completion of the bar that triggered the counter trend move. It's a bit long-winded, but it's quite simple in application. So the next bar triggered the counter trend trade. Now just think about the time of the day for that. Realistically is 6 o'clock in the evening. Okay, so realistically, 6 o'clock UK hours. I'm not really thinking about a trade, but for illustration purposes, it does highlight what we're looking at. So I'm only thinking about counter trend trades for the next 4-hour time period. Now, conveniently, the next 4-hour bar did trigger the low, and obviously on its completion, I can start thinking about resuming with the trend. As it turns out, we've got a hammer bar formation, so we could use that hammer bar formation there to think about resumption of a with the trend. Now let's just go back to the price action sequence for a moment. We know that when price is making higher swing highs, higher swing lows, it's going up. And just marking off the last 2 swing highs, 2 swing lows, you've got the high, higher low, lower high, lower swing low. So if price goes below that lower swing low, I'll firstly have a new direction bias to the short side, and I've also got an indication to think about resumption of the uptrend should that not trigger. So if price goes below the lower swing low, new direction bias is established. So new direction bias is established. So now the direction bias is short, and counter trend indications will be based off hammers, dojis, piercing line, and engulfing bars. I'll be looking for long as my counter trend opportunities. So as the chart continues to develop, we can see that price does continue down. So the initial counter trend trade can quite often lead into a new with the trend signal. Is everyone happy with that? I appreciate in this case this is an engulfing bar. It's not always going to be the case. It just happens to be the case in this example. This is the worst one out of all of them, I think, because of the way that the bar develops. The potential in the short term is very much reduced. So out of all of them that I use, this is one of the worst ones from a potential point of view, because the potential is eaten up by the creation of the bar itself. Potential is something that I'll look at based on an average day's move. So the average day's move to profit from that counter trend opportunity on an engulfing bar often is not always going to be there. So just keep that in mind. Sometimes is, sometimes in most cases it isn't. We've got another bearish engulfing bar there which triggered the with the trend trade. So that now becomes a with the trend movement, and I can start thinking about counter trend as a long trade. So is everyone with this so far? Everyone with the logic on it? So, question from Abel. So the engulfing bar is the trigger, and when price breaks through the low of that bar, that will signal to short on the net. Yeah. So basically, the low of the reversal bar will be my indication for a new counter trend trade. In this case, for a short. For a long, it will be the high of the reversal bar. So we're going to go through a long example now. So what we've got first of all, the counter trend trade basically led into a new with the trend trading opportunity. So now my direction based on a bias change is now making lower highs, lower swing lows, and my counter trend trading opportunities are going to be long. I'm looking for hammers, dojis, piercing lines, engulfing bars, and 2-bar combinations. I'll come on to the 2-bar combinations in a moment. So what we've got on the chart here is a hammer bar formation. Some people might call this a pin bar or a Pinocchio bar. Sonny, for me personally, no, I'm not too concerned. General rule of thumb for hammers and shooting stars is 2/3 wick, 1/3 body. If I'm honest, Sonny, I'm very, very loose with my interpretation of things. I think you can be very, I think with trading you can be over rigid with things, which isn't a bad thing, but my interpretation of certain patterns and formations is actually quite loose, if I'm going to be honest. So I'm not too concerned in that case. It either is or it isn't one of those bar formations. So we've got a hammer bar formation. So now my counter trend, we know with the trend is down. My counter trend is now long. Well, explore this. To be fair, we don't know. No one knows what's going to happen. First thing, no one knows what's going to happen. So what you need to do is you need to make the choice. Am I going to be a with the trend trader, a counter trend trader, a range trader, a breakout trader? What type of trader are you? Only you can answer that. I can't tell you what you should trade or how you should trade. So do I think a reversal is going to come? I don't know. All I can do is apply a logical and mechanical strategy that I know on average makes money. That's all we can do. And anyone who tries to say any different is feeding you a load of rubbish. All these miracle cures that are going around on the internet are a classic example. In this case, that one doesn't trigger. So I can think about counter trend trading above the high of that reversal bar. In this case, it doesn't trigger, and the counter trend opportunity voids if price goes back below the reversal bar. So for example, if the reversal bar high triggers and price flipped over and went through the low of that reversal bar, then I can void my counter trend trade before that 4-hour window to only look for counter trend trades happens. Now there's another condition that we can look at of when to resume looking for with the trend trades. Now to be fair, after that 4-hour time window has closed for these reversal bars, because I'm only going to be looking for counter trend trades for the maximum of 4 hours, but on the bar that triggers the counter trend opportunity on the 4-hour time frame, I'm looking for that 4-hour bar to complete. So it might not trigger until 5 hours. So one 4-hour bar might go by without that counter trend trade triggering, and then the next one might trigger. That would be the bar that I would look at. So for example, if on the next bar, 1 hour into the next 4-hour bar, that counter trend opportunity triggers, that means I've only got 3 hours to be thinking about a counter trend trade setup. After the completion of that, or the closure of that counter trend window, and if you look back at your chart, your 4-hour time frame, look at the bar that triggers these reversal bars, these counter trend opportunities. The bar that it triggers on, it's usually counter trend for that bar at the very least, unless it's going to trigger a new direction bias. But for at least, in the case of a 4-hour chart, for at least the next 4 hours, price normally goes counter trend for a very, very short space of time. So it might offer you up some counter trend opportunities. In the case of the first indication that we looked at, it might lead into a new with the trend trade. So that counter trend trade might turn into a with the trend trade. Depends on how things unfold. So again, let's go through some more examples. 2-bar combinations is what we're going to come on to next. 2-bar combinations. So what is a 2-bar combination? This is really the only one that you probably won't see written down anywhere. A 2-bar combination basically involves bar blending, where I'm going to blend 2 bars or 2 pieces of information together that are next to each other to make up a whole. So I'm going to take the open of the first bar, the close of the second bar. That's my body of this candle. So if I take the open of this first, the close of the last bar, and the open of the first bar, what I can see, to just draw a visual, this is going to be the body of my blended candle. Blended candle. The high is obviously the 2-bar combination as well. And the low of the 2-bar combination. So the blue box is basically body of the two-bar combination. This red line is going to be the low of the bar, and that blue line is going to be the high of the bar. So what I can see straight away, by blending two bars together, I can see that this is going to be an engulfing bar. It engulfs the high-low range of the two-bar combination, engulfs the previous bar's high-low range. So is everyone with that? This is a two-bar combination, a bar blend. By checking out the open and the close of the last two completed bars, I can try and interpret and read between the lines and still try and identify reversal conditions. Think about the way the chart is constructed. We can cut the chart up any way we like, whether it be 8 hour, 4 hour, 3 hour, 2 hour, 1 hour, 10, 5, 20. If you want a 37-minute chart, I can put a 37-minute chart on. We tend to stick with pretty regimented standards, which is daily, 4 hour, 60 minutes, 15, occasionally 30. These are quite common. These are quite common things. When do you bar blend? It's constant assessments. Every 4 hours you're going to assess it. As you can see, it's a 2-second assessment. So we've got the two-bar combination. The open of the first bar, close of the second bar, that's going to be the body of the two-bar combination. Now on a 4-hour chart, to be fair, it's quite easy just to flick up to an 8-hour chart. It's quite easy to do that. But what if that two-bar combination, when you go to an 8-hour chart, doesn't fit into that regimented structure of when your 8-hour bars start and finish? What if you have, say, a midnight, 4 o'clock, then 4 o'clock to 8 o'clock is your 4-hour bars? What if the two-bar combination blended together was 4 till 8, 8 till 12? What if there was an overlap between those 8-hour bars? You would not see the reversal bar on the 8-hour chart because of that regimented structure that we use to create our charts. So this method allows you to read between the lines and not fall into that regimented routine of having your start and end times for a particular bar regimented. Stop loss. Well, to be fair, you can take the trade off face value on the 240-minute charts. So where would I place my entry stop loss? So we've dealt with breakouts, we've dealt with fibs in the past. So if I'm using these reversal bars as my trigger levels to take action, my long trigger is going to be above the higher the bar. I can drop down to my lower time frame and treat it like a breakout. I'm looking for a reversal bar breakout. So I can drop down to my lower time frames to refine an entry. I've got my trigger level. So in this case, if price goes above 133.81, the reversal bar combination high, dropping down to a lower time frame, breakout pullback through that trigger level, entry on the lower time frames, and you obviously don't have to take that big stop loss size on the based off the 240-minute chart. Again, you can look for fibs in the same way. Start the move to the end of the move. You're looking for retracements to buy the dips in a counter trend move until that 4-hour time window closes. So the way that I would do this is assume that I'm short for a moment. First thing to do is to manage with the trend trades. So if you've got anything open when you get a counter trend indication, typically I'm going to manage my trade to above the reversal bar high. And if the reversal bar high is triggered, then I can start thinking about counter trend opportunities for at least the next 4-hour time window. I'm looking after that 4-hour time window for a resumption of the downtrend. Now the way that I can do that is on the 15-minute chart. 60 is too long, 30 minutes is too long, 15 minutes is the Goldilocks one. It's just right. That's in my own experience. A resumption of the downtrend, I can start looking for the same bias change sequence of events to happen on a 15-minute chart. So a resumption of the downtrend, you don't have to wait for the next reversal bar to give you a with the trend indication, although if you want to, that's fine, because obviously there's some great examples on the chart. But a resumption of the downtrend is going to be based on a 15-minute bias change. I'm looking for the price to start making lower swing highs, lower swing lows, but on the 15-minute chart. And that will be my confirmation of a resumption of the in this case, the downward trend. Does that make sense? Everyone understand the resumption of a downtrend condition? 15-minute chart, 15-minute bias change. Any questions so far on identifying reversal bars, identifying the counter trend opportunity? The way to trade them is basically treat it like a breakout, using the reversal bar high or the reversal bar low as your trigger level to take action, and dropping down to the lower time frames. Typically for me that would be an 89-tick chart. If you don't have that, a 2 or a 3-minute chart will give you a similar effect. And I can look for the breach of that reversal bar high or low and look to trade the first pullback. Fibs can then be used as well if price does more significantly retrace. The counter trend opportunity is closed after that 4-hour bar that triggered it is closed or completed, or if the reversal bar, the opposite side of the reversal bar, is then breached. Resumption of with the trend, should you see, as in this case, a nice counter trend movement. Resumption of a with the trend is based on a 15-minute chart. So basically, you're looking for counter trend trades for 4 hours, but if you've still got that counter trend trade open, then obviously you can ride a movement like this. And a resumption of the with the trend based on a 15-minute bias change back short. So you're looking on the lower time frame, the 15-minute chart, lower swing highs, lower swing lows, and a bias change in the usual way. We obviously know what happens. So again, counter trend opportunity. I've already marked some of these off. Counter trend opportunity. So at this point of the chart, even through that retracement, we know that's a counter trend movement and we can treat it as such. Possibly we can trade it, and in this case, there was a nice profit on offer. It's not always going to be like this. Keep that in mind. This is just the most recent chart examples, folks. So it's not always going to be like this. We have seen some pretty spectacular movements over the last couple of weeks. So just keep that in mind. As soon as that 4-hour time window is closed for the counter trend, you are then thinking and looking actively for a resumption of a with the trend movement. With the trend still, counter trend opportunity, again, small profits in this case, only small profits available in this case. Reversal bar, again, it's a with the trend reversal bar. You're looking for shorts anyway, and you're looking to sell the rallies in downtrends. Counter trend opportunity, that's the one I'm interested in. So counter trend, reversal bar, entry above, dropping down to the lower time frames. Again, 2-3-minute charts or 89 ticks if you would trade station gain capital. Looking for a break through the reversal bar high. Again, small pips on offer. Trade did continue overnight or into the evening last night. Now let's think about what's going on now. Price is making low, lower high, higher low, and higher swing high. So we've got a potential bias change on offer. The trend is still down. The counter trend movement worked out fairly reasonably. And you're looking now for a resumption of the downward trend. So let's just take a look and see what that looks like on the 15-minute chart. So resumption of the downtrend. So let's take a look at the 15-minute chart now. If you're looking to sell the rise in a downtrend, we've had the counter trend movement yesterday and today. I'm looking actively for a resumption of the downtrend. That's going to be based on the 15-minute chart with a 15-minute bias change. All I'm doing right now is marking off the last 2 swing highs and 2 swing lows. What can we see? Say what we see. High, higher low, lower high, lower swing low. If price goes below the lower swing low, that's my trigger level to take action for a resumption of the downtrend. So conveniently, we've got a nice live example of a 15-minute bias change for a confirmation of resumption of the downtrend. So how do we trade this? We know how to trade reversal bars, looking for a breach to the reversal bar high, dropping down to the lower time frames, looking for the first pullback, opens up the option for fibs. I'm now looking at a resumption of the downtrend, big counter trend movements done in excess of an average day's move today so far, but the trend still technically for me is still down, looking for shorts. 15-minute bias change is going to confirm the direction for me. We've got the low, higher high, lower swing low, another alternative bias change. You can do one of two things. You can take the 15-minute bias change on face value, assuming that it's within your risk tolerance. And to be fair, in this case, it's only around 55 pips. That's acceptable for most people. On another chart, on another day, that could be quite a large bias change, and you could see that in excess of 100 points. It's just the way it works out. In this case, the 15-minute bias change is quite tradable on its own. But what you can do again is you can drop down to the lower time frames. Again, my preference is the 89-tick chart. 133.91 is my bias change low. I'm just putting this on my lowest entry time frame. So I've now got a trigger level, which is the bias change low. If price goes below that 15-minute bias change low, the direction bias on the 15-minute chart will be down. It's already down on the 89-tick chart. It's making lower highs, lower lows. It's already down on the 240-minute chart. It's making lower highs, lower lows to give me the direction. So I've got 3 out of 4 time frames pointing down. I just need the 15-minute chart to trigger the downward pointing direction. So if price goes below the lower swing low on the 15-minute chart, I can basically take a bias change breakout and use the low of that trigger level, 133.91, price break through the level, look for the first pullback, and effectively treat it like a breakout, a bias change breakout. So if the risk is too great, drop down to your lower time frames, refine the entry. That's it, folks. That's counter trend trading. Reversal bars. Identify the trend direction first of all. That obviously lets you know that when you see a reversal bar, hammers, dojis, shooting stars, piercing line, dark cloud cover, 2-bar combinations, engulfing bars, we know that that can be a counter trend indication. And for a very short space of time, you can be thinking about a counter trend movement. The counter trend window of opportunity for me is on the bar that triggers the counter trend opportunity. I'm looking for the completion of that 4-hour bar as my counter trend window of opportunity. It's a maximum of 4 hours. That counter trend movement can sometimes turn into a with the trend movement. Depends on how the chart unfolds. That was the first example that we looked at. Entries based on pullbacks and fibs in the usual way. We've covered those in past sessions, so I'm not going to cover those now. Looking for a breach of the reversal bar high or the reversal bar low, taking the first pullback on a lower time frame, or if price does retrace more significantly, can refine with a fib retracement setup. The counter trend opportunity closes after that 4-hour time window closes, or if the reversal bar is voided with a movement to the opposite side or through the opposite side of the reversal bar. In that case, you would be looking at an engulfing bar. Confirmation of resumption of the downtrend is based on a 15-minute bias change. And again, we've got an illustration on screen. Higher low, higher high, lower swing low, and that's based on the price action sequence in the usual way. And that will confirm my resumption of the downtrend. Entries, again, break through the support level. the bias change low in this case. Breakout pullback setup. I'm calling this a bias change breakout. Once that has then triggered, should it stop you out, re-entries can be based on fibs, and you can take fibs from the higher the move, the higher the day in this case, to the low of the move. You're looking to sell the rallies in a downtrend using the most recent price information. That's it, folks. That's counter trend trading, counter trend opportunities. That's the summary. Any final questions? Well, that, to be fair, is counter trend trading. The decision you guys and girls need to make is, do you want to be a counter trend trader? You don't have to do it. But if that suits your personality better, then this is an option for your trading style, for your trading personality. Any final questions? Trader, yes it is. Bookie, if you've got Google, you can find that out for yourself. Right, folks, as mentioned, if there's no further questions, thank you very much for your time. Thank you for your patience while we got the recording sorted out earlier. Thank you as always to FX Street for hosting these fabulous sessions. Thank you to you for listening. My name's Philip Newton. You've been fantastic, and I'll see you all next week.